So you've seen the headlines. Mortgage interest rates are at historic lows. However, you may be surprised to learn those low rates are not as easy to get as you might think. Hi, I'm Bob Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. The lending environment has been infected with pandemic concerns, and loans are not as easy to get as they were just 6 months ago. So stick around. I'll give you all the details right after this 8-second break. People who have jobs that should survive the coronavirus economy believe that they'll have no trouble getting a home mortgage. However, more and more people are learning that because of the uncertainty around the coronavirus economy, lenders are taking fewer chances on borrowers. What this means is that borrowers are being asked to put down more money to keep the interest rate they wanted, and lenders are dialing back the amount of money they're willing to lend. Additionally, during the loan process, the lenders are checking employment statuses several times during the process, and again just a few days before closing on the loan. They're doing this just to ensure your employment status hasn't changed. So even though interest rates are at historic lows, getting that low interest rate will probably cost you more money in a down payment, and you may not qualify for as much money as you have historically. The reason is because there are still tens of millions of people out of work, and coronavirus infections are still surging in many parts of the country. Therefore, qualifying for a loan, from mortgages to auto loans, has become more trying even for well-positioned borrowers. Even though lenders have set aside billions of dollars for future defaults, they're also tightening their standards, often requiring higher credit scores, heftier down payments, and more documentation. Some banks have temporarily eliminated home equity lines of credit, while others have also stopped cash-out refinancing. It's not unusual for lenders to tighten their standards during an economic downturn, but the uncertainty of the current situation has made it especially challenging for them to predict the future financial health of borrowers. Because under new criteria during the pandemic, borrowers have been able to pause mortgages, halt student loan payments, and delay paying their tax bill. Well, on the other hand, millions of households have received an extra $600 weekly in unemployment benefits. So lenders worry those forms of government support could be masking an underlying condition that can be risky to the lender, and they're trying to minimize their exposure to risk. Lenders are also taking other measures to minimize their exposure to risk. For example, credit card companies only mailed out 57 million offers to consumers in June, which was down from 272 million a year ago. Some banks have stopped offering the types of credit cards that attract people who may be focused on paying down debt, and some credit card companies are also being careful with current customers. In essence, what they're doing is closing dormant accounts. So if you've had a credit card sitting in a drawer, that account is at risk of being closed by the credit card company. And credit lines with a $10,000 limit may eventually be knocked down to an $8,000 limit, all in an effort to minimize the bank's exposure to risk. Additionally, banks making loans on mortgages have upped their credit score requirements from a credit score of 640 to 700, and sometimes requiring a 20% down payment. Fannie Mae and Freddie Mac, who are government-backed mortgage providers that allow buyers to get a mortgage for as little 5% down, has added a new fee. Beginning September 1st, Freddie Mac and Fannie Mae are tacking on a 0.5% loan fee to mortgage applications. What this means is, on a $500,000 mortgage, you're going to pay another $2,500 in a brand new fee created by Fannie Mae and Freddie Mac to build reserves to protect from defaults. Again, this is in response to the volatility of the pandemic environment and the uncertainty of the future. So when we look at the national average for 30-year fixed-rate mortgages, for example, last Thursday it was at 2.96% and 2.88% the week before. Those are very attractive mortgage interest rates. However, if you've been in the market recently, what you're going to find is now is the criteria to qualify that loan may cost you more money, may lower the amount of money you're able to borrow, and won't be as easy to get as mortgage loans were in the past. So if you're looking at these attractive mortgage rates and thinking of buying a new home, contact your mortgage lender first and make sure you're still able to qualify for the amount of loan that you may have qualified for 6 months ago, because the lending environment has been infected with pandemic concerns and is now different than it was just 6 months ago. If you don't have a mortgage lender, give me a call. I have several different lenders that I use for different situations. I have lenders that can close quickly in 2 or 3 weeks. I have lenders that close on time 100% of the time, which is a huge issue. And all of my lenders will save you a ton of money from exorbitant fees that you might pay to some online lenders you see advertised on television. So give me a call. I'll connect you with a lending professional best suited to your personal situation. Well, that music means we're out of time for today. I hope you found value in today's video. If you did, click that subscribe button and click that reminder bell. That reminder bell will notify you when I post new videos. If you like today's video, give it a thumbs up. That tells Google's algorithm there's something of value in this video. And finally, please Share this link with someone you know who can benefit from the information on this YouTube channel. You can find my email address and my telephone number in the description below and at the end of this video. Call me or email me. I'd love to hear from you, and I'd love to represent you on your next real estate transaction. I'm Bob Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. Every Tuesday morning at 7 a.m., I post new videos about buying, selling, or investing in real estate, as well as some home tours and listing videos. I'll see you next week.